Hello, everybody.
Morning.
Good morning.
Good morning.
Morning.
Okay, you wizards out there, how come I have a dual monitor system? How
Yeah.
come when I have this hooked up to look at you guys on the main screen, who's ever talking appears on the other screen?
That's interesting. So
Um,
you still see everybody on one screen, but then
I see, yeah, I see everybody else on the main screen like normal, like it used to be. But all of a sudden, who's ever speaking shows up on the other screen. Like, there I am.
wow.
There you are. Mark,
Huh.
whoever
Wow.
talks shows up over there.
I don't know. There's got to be a setting that got hit somewhere.
Okay, I thought just that somebody might have known about that. Yeah, you're right. It's got to be a setting. Okay.
I bet your wife was in Zooming with somebody and reset it all up.
Uh-huh. We'll figure it out.
Yeah,
Everybody have,
I don't want to go messing with mine because then I'll get it on. I won't be able to get it off.
well, that's what happens to my end. Start figuring things out, and pretty soon things are figured out the wrong way.
got this new
So there,
camera and it's got this 4K or 4K high definition. And the high definition makes me further away. Whereas if I take it off, it brings me closer. It's sort of bizarre.
ooh, that's pretty fancy.
I
I can
guess
do
it
that
doesn't really
too, but I got to do
help.
it like this. I got to do it like this.
Yeah, I think, yeah.
So did everyone have a good Christmas? Or I mean, like Thanksgiving, Christmas. Jeez,
Yeah.
it's only 3 weeks
Already?
away. Yeah. Wow. I notice your camera, Scott, when it'll kind of go up and focus on something in your back cabinet once in a while.
Yeah, it's got an AI feature to it, and I don't know how that has to do with anything, but that's what it does. It kind of
Huh.
moves in and out, follows me around.
Yeah.
Uh, I don't know how to set it except just to turn it off.
I notice Margaret's does that too. It follows her around when she's on.
Hello, good morning, everyone.
I'm not that fancy yet.
Morning.
I'm lucky to have mine just on.
Congrats to who hold Bitcoin reaching 100K.
Oh, well, I can't believe it's December already, but our temperatures have changed up here. So we're supposed to get 60 to 1 tomorrow, which is pretty good for December where I live. But we're only in the 20s today. Whereas Trent's down there and he sends me a picture every morning of him walking down the beach. So that helps.
It
That
was
helps out my,
45.
yeah, that helps me out, keeps
It
me
was
warm.
45 degrees this morning, so
Well, I feel bad for you not.
I know, I know. It's I
Closest
appreciate
I
your
get is to
thoughts.
wear my Florida hat, make me feel better. But all right, I suppose
Okay.
we'll get rolling here because we got a lot of stuff because we didn't have anything last week. I hope everyone had a good Thanksgiving. It was nice to have some time off and the market trying to get away from that a little bit. Otherwise, you can become consumed, and it's actually you want it to remain fun and not become a burden. So it's nice for me at least to get away from it. And I'll be looking forward to the shorter weeks coming up around Christmas and New Year's. It's right. Christmas is right in the middle, and New Year's right in the middle of the week. So it's going to be two short weeks in a row. It's the end of the year. Not going to be much volume. You're going to see the funds and switch around. I think Nasdaq 100 switches on the 13th. They add or subtract companies, so that'll be interesting to see. I know that MicroStrategy is one they're thinking about putting into the Nasdaq, which would be interesting. You saw what happened when Palantir got put in the S&P. All those funds that follow the S&P they have to go buy that company and buy it every week. When they get their 401k money into the fund. So it'll be interesting to see what happens in in the NASDAQ, and if MicroStrategy actually gets in there. It'll be interesting. It's been on a roll all year, so we'll see. I'll start out with optimism, and I've noticed, just in the people I talk to, my friends who are business owners, that after the election, there's an optimism in their voice again, and they're looking at potential change that'll keep their taxes low, and maybe their regulations are, less regulations, and and just make it easier for life, and maybe inflation go down. So you see that in the market too, but you see it in these surveys. Like the Real Clear Markets Economic Optimism Index came out this week. I mean, nothing's really changed in the economy, but it increased by 0.8 of a point to 54 in December, and that's the highest since August of 2021. Okay, and it's just below market forecast of 54.1. The index continued its upward trend in December, building on the strong rebound seen in November, following Donald Trump's return as the 47th president. And then you look at manufacturing, which has been really hurt the whole time. The S&P Global Manufacturing PMI was revised higher to 49.7 in November from a preliminary of 48.8, and compared to 48.5. So it's almost back to even. And it's pointing to near stabilization in the manufacturing sector. Optimism about the year ahead has improved to a level not beaten in 2.5 years, buoyed by the lifting of uncertainty seen in the lead up to the election, as well as the prospect of a stronger economic growth and greater protectionism against foreign competition under the new Trump administration in 2025. And that was said by Chris Williamson. He's the chief business economist at S&P Global Market Intelligence. And then around here, I went out, had a couple beers with my ranching friends on Tuesday down at the little town bar, and their sentiment is up there. They've been having issues for the last 4 years on crop prices and cost of everything. So sentiment among U.S. farmers plummeted in the months leading up to the election, but surged in October and November as it became clear that President Trump was poised to win. In September, the Purdue University CME Group Ag Economy Barometer Index tumbled to its lowest reading since March of 2016, a time when the farm economy was a mess. This is primarily due to sliding commodity prices and soaring costs, pressuring farmers' incomes. However, the Ag Economic Barometer, a survey of 400 farmers across the nation, skyrocketed in October and November on the prospects of a Trump restoring the ag industry to greatness in his second term. With little change in input costs or still low crop prices since October, the November result is a reminder of the support for Trump among U.S. farmers, the analyst noted. They said producers were optimistic about lower taxes and environmental regulatory burdens on the agriculture economy in the year ahead. Sentiment around future conditions rose more than for current ones. Appetite for capital investment significantly improved alongside the rise in expectations for farm financial performance in 2025. So even without anything changing really in the economy, the optimism can come in, and people, you'll see that in the markets. And if you look at stock market valuations, the stock market is an all-time high, but the S&P is trading at extreme valuations. The historical PE of the benchmark index typically trades around 19 or 20. Today it's around 30 or over. And most of the gains are coming still from just a handful of stocks, which are the Mag 7, Alphabet, Amazon, Apple, Meta, Microsoft, NVIDIA, and Tesla, and they account for 1/3 of the index valuation, but are responsible for half of all the index gains this year. Okay, the S&P is up, I think, 27% the last time I saw for the year, which is phenomenal. But this concentration of returns in relatively few stocks indicates that anything that upsets their upward trajectory will cause the S&P to potentially slide back down. So we've talked about this a little bit, the ETF effect and the IRA effect, that people who have jobs, and it's just every week, every other week, when they get paid, 10% of their check goes into Vanguard or Schwab or wherever it goes, and they buy probably the S&P 500, and so they have constantly that flow moving in, and then the S&P 500 has 30% of it is the Mag 7, so they automatically buy. So there's a constant flow of money buying into these sectors. Trent, you have anything on that one? Anything to say on that?
Yeah, I actually was thinking about this morning on my 45-degree chilly walk down the beach was,
We all
do
feel bad.
fundamentals actually matter anymore? Do they, I mean, we think they matter, but does the market actually think that is, do they put much weight into the fundamentals of a company? And, or is it just mathematics, algorithms, and momentum? You know, is it a reaction to a story, to a headline news or something? And more and more I've thought about it, I'm starting to, I know that for years, most of the trading, most of the movement of markets has to do with the technicals, the mathematics of this equals that, and the volatility of volatility of volatility and whatever. Um, and I start to wonder, do fundamentals matter at all anymore? And at what point will they become more significant? Yeah, exactly, Paul.
Yeah, I mean,
So I look at, I got a chart from a friend of mine this morning, and it's a picture of the Mag 7 and the skyrocket. I think it may have sent it to you or something. But he said it to
I've
me,
seen
and
it. Yeah.
I was like, as long as those seven are going up or those 10 are going up, and that they represent 32% of the market weighting of the S&P, that's the only companies you need to really focus on. And until they break, it just goes higher.
It's interesting because it was kind of the same phenomenon that happened before the Great Depression. There were just certain amount of stocks that really rose the market up. And I mean, there weren't that many stocks. We have over 4,000 publicly traded companies, which is down a lot from 20
Yeah.
years ago. But it's just you just gotta be a history and a student of the past and just keep that in the back of your mind. When we're looking at what's happening today, and again, the market is not the economy. I just showed you, optimism is high, even though really nothing has changed yet. No administration has changed. We're still printing money. We're still, working with the Fed, seeing what the Fed's going to do, looking at jobs reports, doing everything that we always do. Uh, Nothing's really changed, but the optimism has changed. But optimism is like the weather. It can go from really sunny one minute, especially where I live, to a snowstorm in about 2 hours.
Yeah.
So, just be careful and then look around at what's happening around you. And we talked a little bit about this, Trent and I, in the 2RegularGuys video we put out every week. But I thought it was important enough to talk about it here too and get your thoughts. And that's with Warren Buffett and Berkshire Hathaway. And you think about Warren Buffett, and everyone thinks he's just a buy and hold guy. Okay, he's not. Okay, his largest holding, everyone thinks, is Apple, but it's not. It's cash. In fact, he sold off significant sums of Apple stock this year to build up his cash hoard, mostly held in U.S. Treasury bills. His massive cash position, such he is sending out a warning signal to investors may want to heed, and suggesting that Buffett's holding so much cash and not making a large acquisition means he's looking to create a big buffer in the event of a downturn. Buffett told shareholders, in any given year, his large cash position is a sign of extreme financial conservatism, akin to an insurance policy on a fortress-like building thought to be fireproof. But this mass buildup indicates Buffett thinks he may have to just file a claim, meaning that he likes to pile up cash before uh, right before something happens in the market so he can go buy on pennies in the dollar. And the fact that he's had more cash than he's ever had build up is getting noticed, along Wall Street. And I think Trent there's a Buffett indicator, and Trent and I looked at it before. So I'd like to have him show that and kind of tell you what that's about. But it's been this Buffett indicator has been pretty on target.
Yeah, so this is from Current Market Valuations, which is, I think, a research company. And this goes back to September 30th, 2024. And what you'll see here is the Buffett indicator is the total market value divided by US GDP. And so if you go back and look at this chart, it's pretty self-explanatory. zero, this line here, the gray line is fairly valued. The low end line here is strongly overvalued or undervalued. And then the red line up here is anything above that is strongly overvalued or undervalued, overvalued. So it's really easy to understand. It goes back to 1950, and you can see when the Buffett indicator gets overvalued, markets eventually come down. We saw that here recently in the last 25 years with, 24 years of the internet bubble. And that's when we saw Buffett raise cash. As we got probably after he got over into the overvalue, he started raising cash. Well, today is no different, and he has been raising cash. I think he's well over 320 billion, if I remember right. And probably at his next reporting, it'll probably be even more than that. But he's been pretty spot on, as well as identifying the bottom side of things, when to buy. And so when I look at this, I go, it's one man's opinion, it's one man's indicator, but historically, it tells a very compelling story. And I think I was, I was thinking about just how far these individual companies have gone, in particular the Mag 7 in the last, year to date. And when you're up 100, you're up 100+% in a position, we all know eventually that gravity will take effect and pull it down. And I think Buffett is feeling the same way overall when it comes to not just the market, but the overall economy. And if if you see, similar to what we saw during the 2020 boom or the pandemic, it pulled back to more of a, just over fairly valued, it may do that. But I think the amount of cash he has accumulated is so significant that he is thinking this could be another internet bubble of some sort, and he's looking for that opportunity to capitalize on it as he did back in 2010 when he started handing out loans to Goldman Sachs, and he capitalized on that opportunity as well as probably many other companies. So it's something just to take into account, and I think it's a very legitimate thing to be looking at. This is another version of that chart. The ratio is a 208% ratio of market value to GDP. It's 67% higher than the historical trend. So it is up there. It's in the nosebleed section. So I think it just simple, as we come into the end of the year, I think historically this is a window dressing period of time. Mutual fund managers are trying to boost their returns so they can get bonuses. And they only have to beat their benchmark index. So if your benchmark index is, say, hypothetically, the S&P 500 growth category, and let's say it averages, on an annual basis over the last 10 years, 12%, hypothetically, as a manager, you just have to beat that. So if you're up 13% or 14%, you're getting a bonus. So it doesn't take much, they just got to stay above water. And I think this end of the year is historically when they push things higher.
It's going to be tough this year, if their index is the S&P to hit 27% in the next 3 weeks, or it's just going to be tough.
Chances are they got a really good agent and they negotiated their deal to average out 10 years. So it's not 27% returns, because none of those guys would be. You see a lot of foreclosures in the Hamptons.
Majority of fund managers do not beat the major indexes. Majority do not year to year. So, but
what is it, 85%? I think is the stat.
I followed Buffett for forever because I've been a shareholder. I mean, he's 60 miles up the road from me, and I think one of the interesting things about this time that he's got 325 billion plus, in treasury bills that, according to Michael Saylor, he's losing $3 billion a month on that because of the cost of money.
Right.
Regardless, but he's not even buying his own stock back. I mean, he believes that the market is way overvalued, and that's why he's waiting. He's not buying really anything. I think he bought some Domino's Pizza and Pool Corporation, but nothing major in that. But again, he's got a lot of cash sitting there, and he's not even buying Berkshire stock back because he believes it's overvalued at the time. So just take it for what it is. But what you said, Trent, about watching and seeing what others do, it's not just Berkshire. This week Stanley Druckenmiller sold all of his Nvidia stock, and he opened a new position in Broadcom and holds 239,980 shares. Ray Dalio of Bridgewater sold 27% of his Nvidia holding and now owns 4.7 million shares. He increased his holding in Broadcom by more than 290% and now owns 955,000 shares of Broadcom. So these guys don't buy and hold. Okay, when they see it, like in the case of Stanley, he took it all off for some reason, his Nvidia. And in the case of Ray, he didn't take it all off, but he took some profits off of it. And so there's something to be learned about that. What do they see in Nvidia that makes him say, Stanley especially, I'm getting out, I'm going to move it over here. And
Well,
go ahead.
and the story behind Druckenmiller acquiring Nvidia was one of his analysts came to him about it and said, listen, we need to take a look at this. And he had a very compelling story about why they should have bought when they initially bought Nvidia. And so it's not just him thinking about it, it's a group of, it's their team breaking this down, and for them to make that call of saying, hey, we're dumping Nvidia, we're going to Broadcom, there's got to be something more to it than just overvalued stock, you know.
I think you're right, and I think part of it is what I'm going to talk about next is there's competition coming now for Nvidia. Jeff Bezos, he's throwing his weight behind a computing company that's coming for Nvidia's dominance in the artificial intelligence chip market. Bezos Expeditions, the Amazon founder's private investment vehicle, was part of the 693 million funding round for Tenstorrent, the company announced Monday. He joined LG Electronics and Fidelity in the round led by South Korean firm Samsung Securities. Tenstorrent said it will use the money to build out an open source AI software stack, hire developers, expand its global development and design centers, and build systems and clouds for AI developers. The company has strived to provide more accessible and affordable solutions for companies looking to develop their AI capabilities, putting itself in a direct competition with NVIDIA. So far, it has signed about $150 million in contracts, Tenstorrent said. The founder and CEO, Jim Keller, told Bloomberg that Tenstorrent uses an open source and commonplace technology to provide engineering solutions that put AI in reach for more firms. So not just the big firms, the Microsofts, the Metas, the Googles, and skips costly and complex parts, including like high bandwidth memory, HBM, used by NVIDIA. He said you can't beat NVIDIA if you use HBM because NVIDIA buys the most HBM and has a cost advantage. But they'll never be able to bring the price down the way HBM is built into their products and their sockets. So I don't know that much about it. AI is not my deal, but it seems like if they go to open source, it's going to be a lot cheaper for a lot of companies to do that.
Well, one of the companies who open source oftentimes is a catch-up play. You saw it with Meta when they introduced Luna. I think it's called Luna. It's their AI project. They came to the market late to the game versus like a Google or Microsoft or ChatGPT and all them. And the quickest way to accelerate that development is to run open source. I remember Linux, I think, is an open source
Linux,
program.
Yep.
They accelerated back in the late 90s to challenge the Microsoft platform when it comes to the operating software. It's a cheap way to accelerate evolution or growth in a product because there's a bunch of geeks in the world, and geeks I refer to them in a positive hero level in the world, who want just to be a part of doing that, and they just like to exercise that talent they have. They're not in it for the money. And I think that's where to catch up on that semiconductor world, you have to have a bigger pool to, to have developing that, I guess is what I'm
I,
saying. Yeah.
I
What
I
I,
think the ship has sailed. I mean, we're chatting about hardware. We should be talking about like CRM indicated their agent created this digital marketing platform. I think AI use cases is the next place to be looking to make money. To chat about where chips are going to be gone. Yeah, sure. Nvidia it's sooner or later they're going to lose market share, but that
Sure.
boat is kind of sailed. To try to
Well,
find the next.
I think so. I experienced something this today. Well, actually, the last 3 days. I develop everything I do on Google Sheets, and I Google Sheets will allow you to pull data in using some of the scripts that Google provides. Right? Never have a hard time pulling in data. Never. It just automatically populates when I open it. Updates it every 20 minutes. Awesome. The last 3 days, every time I open it, same sheets that worked, prior, now don't pull data in. They're jamming up. And I have to go in and I have to rewrite the script and then I have to reopen it and this, that, and the other. And I've noticed it this morning again. I'm like, this shouldn't be working this way, right? And what I came to this conclusion was everybody's figuring this stuff out and everybody's developing AI and all these software programs, and you got to have the ability to process this stuff and have the hardware and facility to process this stuff. And what I think, I could be wrong, but it just seems logical. Google is inundated and they don't have enough processing. And now they're
From a
going, well, we have to allocate these sources to where we're getting paid most, and Trent only pays $9 a month. He ain't getting nothing.
Google is
So
not
I
the
do
place of
think
choice for
hardware
businesses, though.
development still is a issue. What?
Google is not the place that anybody in the business, they buy a Microsoft suite and they use Excel or everything else that's on there. It's a paid subscription. That stuff uh, will update. Where Google, you're doing it for free or you're paying a little money. That's for the retailer or the people at home that want things free and that want to pay. If you're doing for a business, you're not running into that issue. I guess I'm not sure if I'm addressing your topic here.
I think I,
Yeah.
I I understand your point, and I think it's a very good point. But I also think that the general, going back to your statement of we're moving from hardware to now software, hardware will always be an issue. It'll always be processing speed, and that's a hardware thing. The more and more we become on, remember when the movement to the cloud happened, that was you had to have hardware to do that. I think the AI is a bigger behemoth than the cloud evolution, and I think you've got to keep that in account. But I also agree with you on the software side of it. It will come down to efficiency of use of hardware space and speed that will become an issue.
Well,
So
I
the
mentioned use
development of
cases.
that as well.
The software, yeah, ANET or other big, could think of some software players. That's one thing. But use cases, I think, is the next thing. Where is AI going to make money? Like
monetize.
I
Yeah.
mentioned,
How are they going to
CRM,
monetize?
Salesforce.
Yeah. I
Yeah.
agree with Paul. And when I was in the computer business, when I worked for Compact Computer, and we pretty much put IBM out of business in the PC business by consolidating and working with other companies. And at first, the hardware drove the product. We came out with the 286, the 386, the 486, and we would be innovative and in the speed and the fastness. And we were pushing the software. The only thing that kept us slow was the software, working with Bill Gates and Microsoft back in those days, and the other software companies. And then Intel and the processing got so fast, and then the software exceeded us, and we couldn't keep up on the hardware for the software. Now then the burden came back to us on storage and drive and speed and all that. So I understand what Paul's talking about because we went through it. We drove the software, and then before you know it, it was Bill Gates driving us, and we weren't waiting for him anymore. He was waiting for us, to build the hardware. So I get it.
And your use case is that everybody wanted the latest and greatest computer out there. They wanted what's the next
Yeah,
speediest thing for my gaming application or for whatever that I was doing. I don't want to wait. I want the latest like iPhone. I want the latest computer. I want the latest gadget, right? Because I want that speed to play my game. Because I
I
want to
think
do yeah.
for us back then, it was more business because personal computers are now becoming a big thing in companies like AI is now. So it made productivity a lot better for everybody to have a computer, and that's what drove it. And same thing AI now, as it's driving the productivity. So big companies, they wanted the latest and greatest because as they grew their systems, maybe I'm a company that has 1,000 people and they all have computers and they're all into the tower and everything. Things started slowing down because our hardware was so slow. And so we had to go to the 386, the 486, and they would just buy them. They would just buy them because they wanted upgrades. They were growing so fast. And I think that's what you're looking for is what is the monetization of AI and where's that going to come from? If I'm not trying to speak for you, but that's what it
No,
sounds like you're saying.
that's exactly this week when I heard CRM, Salesforce, the big thing was they monetized AI. And that's why everybody went crazy. And I'm like thinking, okay, that's pretty cool. You're going to hear more of that narrative, but how much can I believe? How much is it real? Microsoft's been saying it forever, but I fear the narrative poking holes in 360 autopilot, so
I had an
I'm just saying.
experience this week. For the fourth time in 5 years, my mortgage got sold off, and it got sold off to Rocket Mortgage, and I hadn't got a statement from them. My old mortgage company said, "Don't pay us this month, pay Rocket Mortgage," and they hadn't gotten hold of me. So on the paper that my old mortgage company sent me, they had a number to call Rocket Mortgage. I called them, and I got this AI app, and all they did was ask a question, and it never gave me an answer. I just wanted to know who do I pay and what time and what's the process. And so I got frustrated. I hung up and I went to the website and I actually got a customer service number and talked to somebody about what the heck's going on, and so that's how I did. So I know Rocket Mortgage is trying to use it, but it didn't help me at all. That AI app,
Well,
whatever application they had.
I mean, how long has AI been in our conversation? 2 years?
Been forever for me. I mean, we had it back in the brokerage firm.
Average in the world, on average, AI was introduced to us in a layman sense of ChatGPT. That was when it hit the headlines, that was it. So the idea that it actually works flawlessly, way too soon. For a Rocket Mortgage should be able to answer your question, you would think, but it's only been 2 years. And even, yeah, they probably have been developing for 10 prior to that, but I think we're going to see a lag.
I
And I
think
think that would be,
the problem I have is they put it out there and it's not answering questions. There's a product out there that for me as a customer, I'm like, okay, this sucks. It's not working for me.
right. Just
And I
answer my
understand.
question.
So I still had to go and call a regular person. So thank God they had a regular person I could talk to.
Yeah.
It's just, it's like you said, it's not where it's going to be yet. And you think about it, and I'll just move on to a little. It kind of reminds me of the dot-com bubble, and which companies made it and which companies didn't make it. And the ones that made it were the ones, like Paul said, that could monetize it. And I kind of got that feeling this week, who's going to make it and who isn't going to make it in AI. And Synopsys, came out this week and their stock fell sharply after they reported weaker than expected outlook. Okay. The heightened focus on AI lifted Synopsys stock. And they said, we build the tools that allow people to build the leading edge chips. And that was their chief financial officer. And he told that to Investors Business Daily last May. But in fiscal Q1 2025, revenue guidance of 1.45 billion at the midpoint was lower than expected. The company's 2025 outlook was also weak at 6.78 billion at the midpoint compared to the median view of 6.9 billion. But the company's forecast appears to have spooked investors Synopsys stock, which moved an aggressive entry on Wednesday just ahead of the results, plunged by 12% yesterday to below its 50-day and 200-day moving averages. So, we're going to see a lot more of this, I think. And, Tran always talks about NVIDIA because he follows NVIDIA and how their earnings are still good, but they're coming down. Okay. And part of that is that, it's the law of big numbers because they're so big and move so fast. The other part is competition. And you can start seeing it, going through the supply chain, that it might be slowing just a little bit, as they try to monetize. So I'm trying to put pieces together from different parts of the AI world, and see where it's going. And we've done this before. Again, like I said, in the .com world, companies did make it and other companies didn't. So I got some good news for Paul. Okay. The Securities and Exchange Commission granted approval to 24 exchange backed by Steve Cohen's Point72 Ventures following the startup's second application attempt. They're approving 23/7 trading. So Paul can trade 23/7. The approval comes amid growing momentum for extending trading hours, with Charles Schwab recently announcing plans to expand 24-hour trading and access to all S&P 500, NASDAQ 100 stocks by 2025. The exchange will launch in 2 phases, beginning with regular trading hours before expanding to overnight sessions between Sunday and Friday. A 1-hour operational pause will occur during each trading day to accommodate routine software upgrades and functionality testing. So you guys know we do this in crypto now. Okay, so it's 24/7 in crypto. This is gonna be interesting, how this all plays out. In 24/7, 24/6, or whatever, 23/7. I mean, how volume and trading algorithms and retail investors like us who are used to getting up in the morning, we look at the news, then it shuts down, and it's gonna be a different world, I think, and one that I think it'll be interesting for me, to see it. Now, do I want to sit there and trade all day? No, I don't. So I'm going to have to, in a swing trading point of view, I'm going to have to kind of rethink my process into a 24/7 point of view, and see if I need to tweak it. And you guys may need to do that too on your investments or yours also. Does anyone have any thoughts on 24/7 trading and equities?
Yeah, your
Stop's more
volatility is gonna
important
go
than
through the
ever.
roof.
What's that, Mike?
Volatility is gonna go through the roof. Because now you're gonna
Or is
introduce
it?
Asia trading, Europe trading. They're gonna trade on news. You're gonna wake up and you're gonna get slaughtered.
I think one thing, Mike, that is going to change is you're not going to wake up Monday morning when something happens Sunday or Saturday night and all, where your stock, either one way or the other, gaps up or down because of the bad news because we weren't trading. So that'll be instantaneously, like Bitcoin now. When Iran attacked Israel, I was at a rodeo and you could see Bitcoin go down and you could get in and out of it at that time. So I think it's gonna even out trading, especially in the mornings at open, after weekends. What's your thought on that?
No. Gonna get insane. Because all the algos are gonna take over and you're gonna get blown out. You're gonna have some very tight risk management on everything you own.
I agree with
Once
that.
they go 24/7, the little guy is screwed. We don't want this. This is like Fidelity forcing New York to go to pennies. What happened to the New York Stock Exchange after that? It died. No trades got routed there. They started routing them through NASDAQ, and all those liquidity centers, and the New York became a liquidity center, but the New York was always there, and the way that they did it was to prevent runaway actions because it was all manual. It allowed itself to slow down. Now you're going to get these flash crashes that are going to come, and they're going to come often. It's a bad idea, and you better cover your ass.
Think
I
this.
think
Do you think that?
it's I think you're right that it's gonna be different. You're gonna have to change your thought process on trading and investing for sure.
Do you think from the retail financial advisory world, this disrupts, take the retail ad, financial advisory world, this disrupts the buy and hold strategy even more so?
Yep. Without a doubt. What are you gonna do? You're gonna go out to a client, you're gonna say, hey, Mr. Client, here's my dividend holding portfolio, and here's your growth portion of the portfolio. Meanwhile, that growth portion is gonna be 75% in S&P 500s. Great, you wanna buy it? No problem. We put you into it. Overnight, something happens in Japan, like the yen carry trade. It's gonna
Yeah.
start in Japan, it's gonna be overnight. People are gonna be trading, all the algos are gonna be trading. You're not gonna be able to keep up with it because you're gonna be passed out. It's the little guy is gonna get screwed.
I mean, they already get screwed, but yeah,
Yeah.
if
Even
it
more
becomes
so.
bigger.
You
Yeah.
know,
I think where this is gonna push it
they tried
is
doing this
thinking,
like 15 years ago and it was shot down.
I think it's gonna push it to a point where there are programs out there with AI and all that that get developed for retail investors that trade for you 24/7. And
And
I
that's
think
what
that's where it's headed. That's where it's
that's what they're
headed.
trying to
Oh,
push you to as a retail investor. Yeah, and take away all
Yeah.
of your individual work per se. You know,
All
this
right.
is like with anything. As technology comes into it more and more and more, the tired and true methods of doing things get swept under the carpet because they're old. But they've worked, like the New York Stock Exchange worked for how many years? 250 years? Once they started doing that, what did you get? You got much more volatility. Once you go to 24/7, everybody's screwed.
But that's what, I mean, that's what the industry wants because they make money on volatility.
They make money.
Yeah.
You don't. You're
Yeah.
gonna get caught holding the boat.
Well, it's
and
going to
you
be
think,
interesting. And I think it's coming. I don't think we're going to be able to stop this. It's coming.
Well, you don't know with the new administration and the new thought process coming into it with the SEC, maybe they'll finally step up and say, time out, guys. The SEC it's a waste. They don't know what they do. Well, let's put it this way. They know what they do and they don't do anything to protect you like they're supposed to. Who do they protect? They protect everybody
yeah,
that doesn't need protection. Grandma can get ripped off and it could take you 10 years to try getting back a fraction of it. But meanwhile, Lehman goes down because of Goldman. And what did they do? They bailed out every bank.
Yeah.
What happened to the little guy?
Well,
yeah,
same thing happened. The same thing happened I mean, the Federal Reserve is the Federal Reserve of the big banks. It's not federal. It's not reserved. Okay. It's a private corporation that looks
And look at their
after,
balance sheet now.
right, right.
How much are they sitting on debt there? I mean, there's a huge debt bomb sitting out there too.
Well, absolutely. Well, it's interesting because Jerome Powell, out of nowhere this week, uh, warned that the U.S. is on an unsustainable fiscal path and called for a course of correction days after the national debt topped 36 trillion for the first time ever. He said the U.S. federal budget is on an unsustainable path. The debt is not an unsustainable level, but the path is unsustainable. And we know that we have to change that, Powell said during an interview with New York Times Deal Book Summit. And I don't agree with what he says next, but he said it. We don't need to pay down the debt. We don't need to balance the budget. We just need the economy to grow faster than the debt. And that's not happening, Powell said. Which was strange to me because I'm like,
He's
yeah,
a
we
tool.
do want to pay down the debt. We don't want to keep building it up because we cannot guarantee the economy is going to grow faster because it hasn't. Otherwise, we wouldn't be in the debt that we're in right now. So anyway, you think these guys are smart, and maybe they are, but that didn't make sense to me. That whole comment.
They're crazy as a fox. Who benefits from all of it? The Fed has no tools in their quiver anymore. They blew them out in the financial crisis. They can't do anything now. The only thing they can do is buy bonds, create liquidity in the bond market. Well, all you're doing is transferring risk to their balance sheet. What are they going to do if it goes bad? They're going to dump more money into it. What's that going to do? It's going to create inflation. Well, what's that going to do to downstream? What they're doing is at a very high level, and it has nothing to do with anybody individual. So they don't.
Yeah, you're right, and you're falling right into what I was going to talk about next, and that was last week. The PCE, which is the Fed's favorite inflation indicator, ticked up in October to 2.8%. That's a long way from 2%. It's not heading in the right direction. That's the highest since April. The headline PCE rose 0.2 month over month, okay, and 2.3% year over year. A jump in the services and durable goods costs drove the reignition of the inflation. And so, like you're saying, Mike, we've been through this party before where they started lowering rates before they were ready, and we saw inflation come back. And I don't care what he says that they got inflation under control, it's going the wrong direction.
Yeah.
And inflation is not under control because we've never had a reading in CPI, PPI, PCE that's negative, that's saying that costs are coming down. They're going up by 2 points every month.
On this
Yeah.
week, I think it was, about the ratio or about that indicator, and that whoever I was reading said that the indicator was basically flawed to begin with. You know, it's too rosy, I think was the bottom line. I'll have to go back and see. I've been reading way too much lately.
I noticed that these reports have been all over the place. Let's just talk about jobless claims and what we're seeing in the employment market. So the jobless claims came out, and the initial jobless claims rose 224,000 this week, ending November 30th, from 213,000 in the previous week, above market expectations of 215,000, and marking the highest reading in 6 weeks. So there's the jobless claims. Then we had non-farm payroll come out, and the BLS reported in November payrolls grew. The growth rose to 227,000, second highest print since March. Okay, and unlike the previous month, most of we had seen downward revisions. The previous 2 months were revised higher. September was revised up by 32,000 from 223,000 to 255,000, and the change for October was revised up by 24,000 from 12,000 to 36,000. And so with those revisions, employment in September and October combined is 56,000 higher than previously reported. So we have initial jobless claims going up. We've got non-farm payroll going up and being revised up. And then on the third leg, we have the unemployment rate, which rose from 4.1% to 4.2%. And the number of unemployed individuals increased by 161,000 to 7.145 million, while employment levels decreased by 355,000, meaning the labor force participation rate edged down to 62.5 from 62.6, and the employment population ratio fell to 59.8% from 60%. So, like you said, Mike, you look at one side of the report and it does this, and you look at the other side and it's the exact opposite, but everything's okay.
With all those numbers you just spit out, there's one that they never tell you. It's the structural unemployment.
U6.
Structural unemployment is the key to anything that. Where's this all coming from? Board of Labor?
Yeah, it's Bureau of Labor Statistics. Yeah.
And what's the reputation over the past year? Pretty shitty. So if you go look at the structural unemployment, you're going to see that that's like this.
Absolutely.
Somebody's unemployed for 18 months and they can't find a job. Well, guess what? They become structural and they don't get counted anymore as unemployed.
Yeah.
You're skewed.
You have to go. Yeah, you're right. I mean, the way if you went and looked at how they put these together, you'd go, okay, why do they even put these reports out other than to sway the market?
Yeah.
But that falls right into.
That's a piece that you have to remember is the Fed is no longer independent.
It never has been.
Well, to a degree, it had been up to with Greenspan, and after that, it started getting controlled more by the politics. And Powell is a perfect example. You know, Trump comes in, he says, well, I'm not giving it up for him. Well, he's obviously has a bone to pick with him for some reason, even though he was the one to hire him. You got to read between the lines with the Fed. They say everything for a reason, and whatever they say is to affect the market and the conditions within the market. But everything they do from a fiscal and monetary point of view is continuing Keynesian economics, which is continue to throw money into the mix. Look at what happens when Powell dropped it 50%. Well, what happened to the mortgage rate? The
Yeah.
mortgage rate actually went up. Well, why is that? Because the market saw through what he was doing. If he drops the rates again, it's gonna cause downstream effects in the mortgage market. Okay? The mortgage market, if it becomes quote unquote cheaper for people, they're gonna go out and take risk now. And the more risk they take on, you're already in a risky market in certain segments of the country. So
I think the problem I see in that, I mean, the mortgage rates can come down, Mike, but I'm talking to the people I talk to, the ability to secure a loan and the requirements to do it are higher now, and they are not making as many loans.
Whoa, I just took a HELOC because we're thinking of moving and I want to do a couple things. I'm going to do it under the house and then get rid of it, pay for it and be done. I had to jump through every fucking hoop you could think of and then some, to the point where they wanted K1s from 5 years ago on securities held in IRAs. It's like,
Yeah. Well, that's what Bob, our Volt guy who's not here today said, in his business loans, he says it's more of a formality. They'll take your applications all day, but you're not going to get the loan no matter what you have. And that was his put last time I talked to him about it.
Yeah.
I mean, when you look at, just the reports and everything, Challenger Gray and Christmas came out and they said that US based employers announced 57,727 job cuts in November, up 3.8% from those announced in October, and up 27% year over year. Okay, job cuts. The outplacement firm Challenger Gray and Christmas said Thursday, the 4-week moving average, which reduces week-to-week volatility, rose by 750, 218,000 to 250. Year to date, companies announced 722,566 job cuts, a 5.2% increase from those announced in the first 11 months of 2023, excluding the year-to-date total of 2.23 million in 2020. Announced job cuts are the highest they've been seen since 2009. Okay, so again, you go back and you look at all the rosy reports, and then you look at things like this, and these guys obviously deal in this. It's no wonder people are confused. November saw downstream cuts to automotive suppliers and parts manufacturers, as well as ongoing cuts in consumer and industrial manufacturing, said Andrew Challenger. Technology also saw a high number of layoff announcements as that sector continues to undergo significant changes. The automotive sector announced 11,506 job cuts in November, the most of any sector and the highest monthly total since April. Year-to-date, automotive companies have announced 45,800 job cuts, up 59% from the first 11 months of the year. Technology companies reported 10,231 job cuts for a total of 130,791 year-to-date. Healthcare and healthcare products industries, excluding hospitals, announced 47,000 job cuts this year, down 18%, okay, from the 11 months prior to that. So we're seeing, on one side, we're seeing increase in job cuts, and on the other side, we're seeing, and also seeing unemployment rate tick up. And so again, we go back and look at these reports, like Mike's saying, and it's apples to eggs. We're not looking at the same thing, but we can see it in the economy. U.S.-based employers announced 761,954 hiring plans for the first 11 months of this year, and that's down 2% from the same period a year ago, and the lowest level since 2015. And like Mike was talking, it takes longer to find jobs. A report came out this week. It's taking longer for hundreds of thousands of out-of-work Americans to find new jobs, signaling cracks within a once-hot labor market as employers continue to cope with the impact of higher borrowing costs. About 40% of the 7 million people who are out of work in October, or roughly 2.84 million people, have been looking for work for more than 15 weeks, an increase of 20% since a year earlier, according to the Bureau of Labor Statistics. More than half of those job seekers have been on the hunt for new employment for more than 27 weeks, or about a half a year. So when I look at all this, my question, I've said this before for a year, are we looking at stagflation? Because stagflation is an economic condition characterized by the combination of three negative factors. The first is slow economic growth, meaning that the economy is not growing at a healthy pace, leading to stagnant or declining GDP. Now, our GDP is only 2.8%, and that was compared to 3% in the previous quarter. So our GDP is going down. And if you dig into the report, a majority of our GDP comes from government spending. High inflation is the second leg of the stool. This occurs when price of goods and services rise, reducing purchasing power. And again, our PCE is 2.8%, rising month to month. And then high unemployment is the third leg of the stool. Indicates a significant number of people are unable to find jobs, leading to economic distress. Again, we're at 4.2%, up from 4.1%. So it presents in stagflation a challenge for the people trying to deal with it, like the Fed and Treasury Department and Congress, as traditional solutions to address one issue may exacerbate the other. For example, increasing interest rates to combat inflation, which now we're lowering interest rates, can slow down economic growth and lead to job losses. Conversely, easing monetary policy, which is what we're doing to stimulate growth, can fuel inflation. So I think we're seeing that, like Mike, you were talking about, we're kind of in a catch-22 here. You know, if they lower rates, inflation will go up. Inflation goes up, jobs might come down or go up even more. So I'm thinking if they continue down this path, we're on the road to stagflation. Any thoughts on that?
You can add two other factors into that. Number one, the market is present day. Everything's about now, news, trading the news. We know that come January, there's a tidal wave coming that's going to change a lot of things. You're going to get a lot of friction from the powers that be to the powers that want to be, as we might call it. You're going to have a lot of uncertainty from this point forward. And as a group, I think it'd be wise that we all put our heads together about risk management on everything in your portfolio. Because again, something's going to kick off potentially overseas, like the Bank of Japan and the yen carry trade. You know, I shared an article on that, and my man there says, you know, the market's pricing it into it. Well, maybe not. You don't know what's going to happen in the background with all these algos and what have you, and what they're set for, and what that can do and create its own momentum.
What exactly is that?
Once it gets into derivatives, it starts that domino process going.
Oh man, they're a fucking mess. Derivatives are, oh.
Yep.
They don't even know how much is out there. And, you know, that was half the problem in the financial crisis. They didn't know how much derivatives and who owned who. You know, there was no quote unquote controls around it. But the Fed has no tools to protect us. So.
And that's not their mandate either. You know, they're not going to do that. They're not. I mean, I think what they're trying to do is just prolong and keep things going as long as possible, you know, through continuing spending. Yeah.
They're trying.
It's going to be interesting because I know that from reports that the government is spending as much as they can right now before the change of administrations, and more money into the system means more inflation probably. And we'll see how that all works out.
One way or another, it ain't going to be pretty, guys. That's my gut.
And again, it's the hand we're being dealt. So we got to play the deal, you know, and so we got to, as a group, figure out what's best. And I agree with you. Risk management is going to be key. It is. And
really, no. If you create a basis for it now in risk management, if they do decide to go 24/7, then that could be expanded to cover that aspect of it, because that scares the hell out of me. You know, the downstream effects is not going to be present.
I hear you. All right, I'm going to move on a little bit, and I want to go to one of my favorite subjects, which is Bitcoin, and it finally hit $100,000. Okay, And I was sitting in my local tavern this week when it hit, and I got the message from Scott. He sent it out, and I was sitting at a table with my friends who I told you about, a long time ago or within this year, where I told them they should buy at least a tenth of a Bitcoin at $6,500, and if it hit 100,000, they'd have 10,000. And you could just see the smiles around the table of those who did that, and you could see the non-smiles of those who did not, or a little bit late. But anyway, it did hit 100,000, and it's since come back down, but now it's sitting around about 100,000. And once it broke 100,000 on Thursday's Asian morning, it was soon up to, I think it got up to 104,000. And what Mike Novogratz, he's the founder of Galaxy Digital, said, we're witnessing a paradigm shift. Momentum is fueled by institutional adoption, advancements in tokenization and payments, and a clearer regulatory path. Some of the potential catalysts for the rise to the 100,000 included Trump earlier confirming that he had selected a crypto advocate, Paul Atkins, to replace the hated and outgoing SEC chair, Gary Gensler. And then there were comments from Vladimir Putin, of all people, who said at an economic forum in Moscow that nobody can prohibit the use of Bitcoin and other virtual currencies. The nomination of a pro-crypto SEC commissioner was one of Trump's promises to crypto voters earlier on in the campaign, and highlighted in his keynote speech at the Bitcoin 2024 conference in Nashville. I think he just appointed an SEC, he appointed someone today that, Office of AI and crypto in his cabinet. There to be a secretary. So that, I think, popped the market a little
David
bit
Sachs.
too. What's that?
David Sachs.
Yep.
He was the, I believe, CEO of PayPal.
Right.
He was part of the PayPal mafia with Elon and a couple others. He's on that the podcast, All In podcast with Shamash, what have you, Jason something, and another guy.
Yeah.
Yeah. He's been a very pro supporter of Trump as well.
And crypto and AI. So
Yeah.
you're going to see this administration looks like very friendly to AI and crypto for sure. And since
It's a
Trump,
very tech
go ahead.
driven group of people and very progressive, forward progressive kind of group. They're thinking, what does the world look like in the future?
Yeah.
It's interesting.
It will be. It's going to be an interesting 4 years. It's something I've not seen in my life probably since the Reagan Revolution, when everything kind of got changed then.
No.
So the crypto market, again,
Jump in real quick, Mark.
Yeah, go ahead.
That's something that we should all take into consideration is the amount of shorts out there in the market. You saw that with Tesla this year when he came out and said he was gonna, donate 300 million to the PAC to elect Trump. He got attacked with the short sellers, drove the price down. You're gonna see that where these people that have a lot of money and they don't like things for politics, they will short a company just to screw whoever. And they don't care who's in the wake. So when you do your analysis, you got to look at that. And that should be a flag that tells you if that position starts going up, also the call options or your put options, what have you, if that changes drastically, those are red flags to raise your hand really quickly. Personally, I think, you're not going to have any time to react. It's just going to happen and you're going to be like dumbfounded that it happened so fast.
That's good. That's good information for sure. Yep. Talking about crypto market, it's jumped 1.4 trillion since Trump's election on November 5th. And that puts crypto larger in market cap than Saudi Aramco, topping $2 trillion. And I have a chart I can show a little later. It's like number 7 in the world of market cap now. So it's moving up. Gold is the top market cap at the moment, but it's moving up and it's becoming more mainstream. So Bitcoin adoption. With these Bitcoin ETFs, they've attracted inflows of $32 billion this year, including over $8 billion since Trump became president. Combined trading volume for digital assets and relative derivatives across centralized exchanges climbed to a record of more than $10 trillion last month, according to CC data. BlackRock's iShare Bitcoin Trust, which I own also, I bought it when they first came out, has surpassed 50 billion in assets under management, achieving the milestone in just 228 days, more than 5 times faster than any other ETF in history. Valued at a market cap of 685 million, Nano Labs is a fabless integrated circuit design company. So you're starting to see companies take what MicroStrategy did and put Bitcoin into their treasuries. And this Nano Labs, it was founded in 2019, based in China, develops computing chips and offers distributed computing and storage solutions, smart network interface cards, vision computer chipping. Nano Labs went public in 2022, currently trades 91% below all-time highs, trailing the broader markets by a wide margin. However, NA stock has experienced strong upside momentum in recent trading section, is now up 145% over the last month after it announced plans to purchase $50 million worth of Bitcoin over the next 5 years. In a press release, Nano Labs explained this strategic decision underscores the company's confidence in Bitcoin as a long-term store of value and a foundational asset within the rapidly evolving Web 3.0 ecosystem. Nano Labs isn't the first publicly listed company to have Bitcoin on its balance sheet. MicroStrategy is the largest institutional holder of the cryptocurrency with over 402,100 Bitcoin, purchased at an average price of 58,263. Accurex Pharmaceuticals, the board of Accurex Pharmaceuticals approved the purchase up to 1 million of Bitcoin to hold as a treasury reserve asset. Its limited supply and inflation-resistant characteristics provide a functional store of value, he said. This new treasury strategy is a financial strategy and has no impact on our overarching drug development plans. This week, Michael Saylor, who's MicroStrategy's chairman, he pitched to the board of Microsoft on his Bitcoin strategy, treasury strategy. He had 3 minutes to pitch him, and he put together, and within 3 minutes, he put together a 44-slide presentation and called for Microsoft board of directors to abandon their conventional financial reliance on treasury bonds, buybacks, and dividends, and instead embrace Bitcoin. He called for Microsoft to convert their bonds and buybacks to Bitcoin, arguing that the traditional investments only amplify the company's risk factors. According to Saylor, investing in Bitcoin eliminates counterparty risk from competitors, countries, corporations, predators, cultures, or currencies. He projected that if the tech mogul redirected all treasury funds, debt, cash flow, dividends, and share buyback allocation into Bitcoin, the share price could spike to $584 within the next decade, assuming the coin's value reaches 1.7 million per coin by the end of 2034. He also proposed that Microsoft invest 100 billion annually in the asset, claiming it's more practical for the company to purchase Bitcoin instead of repurchasing stock and holding bonds. What if you could buy a $100 billion company growing faster than Microsoft for one-time revenue? What if you could keep doing it every single year? Moreover, he believed Microsoft could see increments between 1 trillion and 4.9 trillion to shareholders value versus Bitcoin by 2034. Other companies such as Tesla, Coinbase, Block also hold Bitcoin as their strategic financial reserve. Governments are getting into it. We've got 7 states with proposals to buy Bitcoin and put it in their reserves. Vancouver Mayor Ken Sim has proposed a motion for the city to adopt Bitcoin as a reserve asset to preserve purchasing power and embrace financial innovation. I guess what I'm seeing, and I've been in it since around 2020, and I've studied it all. And you know, I started out with, you know, this is crap and it's not going to do anything. I don't know what it is. And now I'm at the point of, okay, it's an alternate asset. It's a commodity. It's a store of value. It goes up by 60% a year on average. Why wouldn't I want some of that in my portfolio? And I'm no financial advice. Everyone has to look at it the way they want to look at it. But for me, my results have been really, really good. And when you see how, you know, even the U.S. government, there's going to be, you know, some legislation going through the Senate to see if the U.S. government will put this in a strategic reserve like their gold reserve, up to 1 million Bitcoin. That's going to cause a supply crunch. And the reason that really sold me on it was supply and demand. There's only 21 million of these. There's only about 1.5 million left to be mined. And so, you know, once the supply runs out and the demand's up, like we're seeing, prices go up. So the recent corporate buying spree is adding to the bullish sentiment of the latest Bitcoin rally. While the purchases are not gigantic on the scale of traditional finance, they are creating a supply crunch for Bitcoin. Easily available Bitcoin for big transfer becoming scarce, and more large entities are holding their coins closely. A recent corporate reserves combined with ETF buying and holding to create a new category of Bitcoin owners. On-chain data shows whales hold a relatively small amount of Bitcoin. On the other hand, as a whole, corporate owners are advancing in their control over the supply of the 21 million coins. In total, Bitcoin in the hands of corporations, ETFs, and large-scale government holdings already covers about 14% of all Bitcoin. That scale of holding of more than 2.8 million Bitcoin already surpassed the miner's reserve of 1.91 million Bitcoin. The amount is still relatively lower compared to Nakamoto's initial holding, as well as supposed lost or locked down Bitcoin. Anyway, I look at it as, an asset value that is as every bit important to me as AI for the future. And so again, that's why I talk about it. It's been up. I mean, when we started talking about it on this channel, it was at 65,000. Okay, now it's at 100,000. It's pretty good. It's a pretty good bump up. I want everyone to kind of go look at it on your own, and determine if there's a small part of it that should go in your portfolio. And because you don't know about it doesn't mean it's not a real asset out there. Just like when the internet came up, just like with AI right now. And I think the one thing that was interesting to me is because of Bitcoin moving up, surpassing major milestones, is one sign investors are also about to see a year-end stock surge, according to Tom Lee. And Tom Lee's the FunStat guy. He called for Bitcoin to reach 100,000 since the start of 2021, said the crypto finally hitting six figures was a positive sign for equities. That's because the rally in Bitcoin illustrates how investors are building up their appetite for risk assets, suggesting they would also ramp up demand for stocks. Traders are also showing that they're starting to deploy their sideline cash, he added, referring to the 6 trillion traders have stashed away in money market funds while yields remain cyclically high. Lee predicted the S&P could hit 6,300 by the end of the year, and find another 3% upside from current levels. So again, it's just one of those asset classes and that feed off each other. And it's something that I personally own and my friends are owning. And again, we saw that the downside risk at 6,500 for 1/10 of a Bitcoin has paid off, at least for now. And again, past results are not indicator of future results. But anyway, it's something that I think that we don't talk enough about. But I think it's something that if you have it in your portfolio and it's very volatile, I think it'll pay off in the end. And it's not financial advice. That's just based on 40 years of looking at assets that it's sold me. Go ahead.
We talk about it, Mark.
Yeah, we do. Yeah.
Yeah.
But anyway, I just think it's something that can really, and I've told my friends, I said this in my lifetime, other than, you get a certain amount of things that can generationally create wealth for you. And, we're looking at AI, we looked at, the tech, Microsoft, the Mag 7s. We looked at the .com that came through. I mean, there's just certain times in your lifetime, they aren't very often, where you are dealt an opportunity that may provide you with an opportunity that we always talk about with, like, God, I wish I would have bought Amazon, was at $2, Okay.
Do you think that, so you have a new administration going in who's like gut the system, rebuild the system mentality. You have, 24-hour trading potentially becoming the wave of the future. You have crypto, in particular Bitcoin, becoming legitimate because it's getting endorsed by states, nation states, and corporations, and even potentially our government. What does the world look like investment wise in the next, I don't know, 5 years? How does it dynamically change how we go about creating wealth in the world? You know what I mean? Does it become more readily available on a global scale, with these shifts? It just, it just seems like there's something brewing in a sense, you know?
Well, I think that the rich will continue to get richer because these systems, like Mike was talking about, are made to enhance them, and they get richer by taking money away from retail investors and spend that way since the beginning of markets. Um, so we just need to be smarter. We need to look at what they're doing, and that's why for this discussion on the Platinum Channel today, I wanted to go and show you the different reports. I wanted to show you what Buffett's doing. I want to show you how Bezos and all the Druckenmiller are doing with things that a lot of retail people they'll get into Nvidia and keep it forever, and because and they might get in late, there might be FOMO, where we can sit as a group and look at what's going on around us and say, why are they doing that, and how does that affect me? It's going to be harder for us, I think, but as a group like this, I think it's going to be easier than if you're doing it on your own, or for the average guy or gal. Any comments? Anyone
Yeah.
else? Anyone else? Mike, Scott, Paul, David?
Well, you got me into this Bitcoin thing the last couple of weeks, and I have to admit it, I've ignored it for a long time. But Powell said something the other day that really made sense to me in the fact that he said that Bitcoin is not a currency. Bitcoin is this generation's gold. And it's always been a premise for anybody with a portfolio to have a certain percentage of your portfolio in gold. And I think Bitcoin is going to be the same way. You need to have at least 10% of your portfolio in Bitcoin. It's not going away, and it's going to be a world economy. And as far as investments, it looks to me like the world is becoming more educated, um, more sophisticated. I see a lot more business opportunities, and it looks to me like the businesses are just getting better. I see the stock market, investment markets all over the world just starting to feed off each other, and I think a lot of this stuff is just going to continue to go up. I don't see a downside.
And there's that optimism we started out, our talk about is the optimism. And it's so strange because this week, four of us, where I grew up, this little town, it's part of a bigger town now, but it's a little section, and it still maintains independence. Four of us went, we put up on the main street for $4 these wreaths around these poles and these snowflakes that light up. And we did that this week, and while we're standing there, a guy came out from one of his stores, and he sells like sports memorabilia, and he was talking. He said, I don't want to be political. He says, but I was ready to shut my store down. He says, until this election. He says, I just feel more optimistic. He says, so I'm going to keep it open through the summer and see what happens. And this is just a little shop guy, one guy who runs his shop, and he only, telling me that. And he's not the first one that came up with that optimism that you see, David.
I think the thing I enjoyed on Trump's first time round, even though he was a rookie at being a new president and he was surrounded by some people that were not good people. But I noticed that when you looked at the job numbers, the jobs that Trump's economy creates are real full-time positions. Where a lot of the positions that we've had in the last 4 years, they've been announcing the job numbers, but half of the job numbers, or a third of them, were part-time workers. They were seasonal work. It was just, they weren't good jobs. And I think people are underestimating the power of this country when we shift from a economy that is 1/3 the government, and we cut that back and we privatize a lot of those systems and let the business community roar. You're going to be shocked at how powerful this country really is.
So that's what I'm
Well,
with you on that. It'd be nice to see a change. And if we do see a change, could we see this country just accelerate like to the upside?
Yeah, I
And what
I
does
just
that
want to
look
see
like?
people, I want to see people get real jobs. You know,
Yeah.
whether someone's in the is in a poor area or middle class area, I just want people to have good paying real jobs that they can take pride in. And the whole thing will just I think
I think that
accelerate and just get
I
up.
think that though takes a change in how we think as a country, as individuals. There is a lot of um, support of just give it to me, you know. Having a job, I don't want to have a job. You know, if we can see that change, that'd be awesome. You know,
Jason, you had
starts
your
at
hand up
home.
for a second there, Jason? Did you have
Yo,
something?
Jason.
Oh, hey, what's
Yes.
up, guys? No, I was clapping. I totally agreed, man. I was like,
Oh,
that's what
okay.
we need. So yeah, you got me into some Bitcoin too. I'm slowly. When you said that, I told my friends just to buy a little bit of it. I was like, well, crap, I'm just gonna go buy a little bit of it. So it's definitely been more than I had 2 weeks ago. So
Mark's
I'm not.
guilted us all into buying Bitcoin. If
right.
you don't have
No,
Bitcoin, you shouldn't be on this channel because Mark's
no, I've
guilted
never
us
said that.
every
I,
week.
I,
What?
I'm not. I'm not
Every
guilting you.
week.
I'm just telling you that in my 40 years of doing this, and after being a naysayer for 5 years before, and then finally looking at it from a Michael Saylor point of view, and him being an engineer, and me spending the first part of my life as an engineer, it just makes sense to me, you know, along with my economics degree, that what he's saying and what this is it's not just nothing out there. It's actually something that can cause generational wealth. And I'm not saying you shouldn't have risk management because it's volatile, okay, and it could drop 20% tomorrow, and it does, okay. So you got to have a stomach for it. But for me, I don't want you guys to miss it if it's something that it fits within your risk management, because it has a higher opportunity, in my opinion, to accelerate you financially than AI. Okay, and I see that the AI and and crypto are at least blockchain are related in this trip forward in the future. So I'm glad that it's working out. Be prepared for maybe some heartache in the future, but with this increased demand for it, you know, and the fact that institutions and Larry Fink and Jamie Dimon and all these guys who used to call it garbage are now buying it, and you can see it. J.P. Morgan has a ton of it, of the IBIT, and you know, and Larry Fink's laughing all the way to the bank with his best ever ETF in the world. You know, I think it's in governments doing it and companies buying it. Uh, and this all started out with retailers. I mean, the crypto cowboys and the retailers are the kids that you see on YouTube that, you know, bought it at, you know, 4,500, you know, coins at $10, and then we're just laughing and are not selling it, you know. So anyway, Ard, I see your hands up.
Yes, Mark, I have bought Bitcoin a few times, small amounts. The first time I bought was $10,000. I wish I had bought much more at the time. But when you mentioned it, I tried to go and buy more, but I couldn't move. I was using the one of these retirement account to buy inside retirement account, and I couldn't move money in time. So it was 57 and things. It went then suddenly to 70, 80. So I couldn't buy. Now I'm wondering that through your analysis that you show us, do you think that's going to come down that to wait and buy it when it hits that, I don't know, 50 days or 200 days or something? Or
It's interesting, and I always tell everybody that Bitcoin is not a company. It doesn't have annual reports, doesn't have spokesmen that come out, it doesn't have suppliers basically. So it's hard to to know. Now for me, I'm just going to put this up so you can see, and this is This was yesterday. Okay, and before market closed, it was about right here. There was a big old wick down, and it went down to 92,000 and popped back up. And these aren't unusual to see. It's to tell you when to get in, I really can't. All I know is, it's following along at this point between the 9 and the upper Bollinger, and we're starting to see oscillators look good, again on Bitcoin itself. I find that, here's MicroStrategy. MicroStrategy, popped up, and now it's just following its green line of death, and we're seeing a little bit of convergence. This is, Michael Saylor's. IBIT. This is this is the ETF by BlackRock. You're seeing just, basically flat but not diving oscillators, and it's come up, and again it's come up and hit its sell order resistance almost twice. We got converging Bollinger Bands. So I mean, if you're trying to time it, you can use technicals to do it. I know Bob from Florida does that. But for me, if I believe, like I do, that this asset class, because it's limited in the number, okay, I can't find any more. Gold, for say, China just announced they found the biggest gold supply ever. And so gold can always be devalued because you find more gold. You can't find more Bitcoin. So for me, Art, I look at it and I say, if it dips down, maybe I'll buy some more. But I think it's going higher. So if you think an asset's going higher, and this is just based on the research I do, it's not based on supply and demand, and based on what we just went through, this asset could be at 150,000 by the end of next year. You've seen the experts say that, or even more, 250,000. Or it could be at 52,000. Okay, because that's the way this thing works. But you look at downside and upside risk. I can't tell you when to get in. I just can tell you that I believe that it's a pretty good asset to have a little bit of your portfolio in, just like you would in real estate or gold or silver or equities or bonds. I don't know if I answered your question, Ard, but
Yes, I think you did. But incidentally, last time I bought was 52,000 that you just mentioned, long ago.
good.
But this might be helpful for some of our members here that I moved some money in my IRAs to an IRA called Alto IRA. You can buy inside that through what is that, the famous Bitcoin shopping place? I forgot the name.
Coinbase.
Coinbase is connected to Coinbase. So inside Alto IRA, I buy essentially. I can buy anything, but I bought Bitcoin. I bought a little bit ETH and other things too, but mostly I am sticking to Bitcoin for the reasons that you have discussed. And also my studies shows that because it doesn't have ownership, really that's the most secure one to buy and sit on it for a long time. And that's my intention. I haven't bought that much, but I wish I could have dared to do more, but I am just keeping very small amount of my retirement on that.
Yeah, and I don't think you need, everyone thinks of Bitcoin, it's 101,500 right now. You don't have to buy one Bitcoin. You can buy one millionth of a Bitcoin called a Satoshi, okay? Or you can buy a tenth of a Bitcoin. A tenth of a Bitcoin right now would cost you $10,152 to buy a tenth of a Bitcoin. Okay, so again, like I told my friends, at $65,000, for $6,500, it goes to where it is now, and now you're at $10,000. Okay, and that's within a certain amount of time, 6-8 months. Or it can go down too, which when they got in, that was back in the summer, and it went up. It was go between 52 and 70, 52 and 70. And they were all like, well, what do we do? And I said, you don't do anything. You just let it. You know, you got your $6,500 in there. That's basically in my group. That's 1 month's worth of beer drinking for each of them, you know. And so again, I said, just let it sit and don't worry about it. And look at the downside versus the upside. And so that's how I look at it. That's my personal view. It's not trying to tell everyone to get into it. I don't want you to get into it and then have it go down, and you don't have the means that you need to be in it, and it takes away your rent money. You know, this is certainly not something you put your rent money in, but it's certainly something you can dollar cost average in. So, Jason,
you.
and then we'll go to Scott.
So we're talking a lot about crypto today, which is probably on a lot of people's minds. Can we, or do we have the ability to just ask more questions? Because I know, like, initially this whole thing's set up for swing trading, and it sounds like a lot of people aren't going to really swing trade crypto. It's more of a, you know, buy and hold. But there's so many questions that, and it's hard to get clarification. Can we ask them in like in our group chat under crypto, or
Yeah,
is that something
Yeah.
that okay? I don't want to break any rules or anything, but
no, I don't think we have any rules, do we? Other than
think
be,
so.
other than be
We've
nice
talked
to
a
each
lot.
other. Yeah, be nice to each other and help each other make some money. Those are the only two rules that I know.
I love it. All right, cool. Then I'm gonna shoot a couple. Just like my biggest thing is like a wallet. You keep hearing about wallet, but I'm like, I don't own a whole Bitcoin, so what's the point?
Well, something we could do too, Jason, is just set up another Zoom call where this is what we talk about, you know, under the Platinum channel, you know.
Yeah, that'd be awesome. That would be real
Trent,
cool.
is that something that we can do, or is that something?
Yeah. Yeah. If we want to set something up next week, we'll just decide on a time and sort of get a universal, um, idea what time would be best to do something like that. Because I think there's quite a few Platinum members who would love to talk about this. Even
Yeah, I think
yeah.
it'd be fun. Yeah.
That might
And
be a way to.
that way we don't have to type our fingers off trying to answer stuff. And I think that,
right.
and again, I don't want Platinum just to become a crypto channel, but I think with what's happened in the last 2 months in this asset class,
Exactly.
it's something we should be considering, because it's something that could be generationally wealth building for our group. Could be.
And that may be something that you can roll some of the, I don't know what the other people that aren't Platinum are called, but you know, everybody's wondering about crypto. I mean, my 80-year-old mom's like, what is this? Is this something I should do? And so I know people have questions because that's all you're hearing. So,
Yeah.
I mean, that might even be something, hey, people that are in the entry level, we're going to start, you know, having a crypto call, but you need to be Platinum, you know, upgrade now.
Yeah. I mean, I'm glad there's some interest in it, and I think if we kind of spin it off so that we can talk more charts and stuff on this channel, you know, on other stocks. And I didn't mean to take up the whole day on it, but you know, it's been something that's really done well, you know, the last since November for sure, and over time. And I'd like to talk more about the cycles and the power models and all those too. You know, I'm not an expert in all of it, but it's fascinating to get into that, and we can do that too. And I'm certainly open to anyone who wants to talk about or teach us about whatever you know. I mean, I just really deal in Bitcoin, have a little bit of Ethereum, a little bit of Cardano, and that's about it. But Bitcoin is my main investment in this world. So, Scott, what do you got?
Well, this might be a moot point to bring this up, but Ard was talking about entry on buying some more Bitcoin, but in the last, I don't know if it was during the week or the last call, last Friday, I believe, we were talking about Bitcoin reaching 104, maybe 106, and then pulling back.
Yeah.
Or at least that's what the experts were saying. Any truth that the charts are still saying that?
Well, I mean, where that came from was right here. This chart here, where I said we were in a pennant wedge. And then if we got above it, you know, you pretty much take a stick and you go up, and what we saw was, you know, the Bollinger Band at the time, about 104. And that's where it went to. Now we're looking at, you know, taking this distance here, if it keeps going up, and it would get us to 120, 125 maybe, if this pattern holds out. Okay. But again, that's charts are good, but they're not foolproof, you know. And so what time frame that would be? I mean, the potential is to go down too. I mean, we got a 50 right here. At any point we can break through technically and go down, and you know, 50's at 82,000. Okay. Your
Right.
your lower Bollinger Band is at 89,000. So, you know, variation, that's only 2 standard deviations off, you know, the mean, but we've been rolling along the 9, and then you can see the last 3 days we've just been bouncing up and down between them. And I think with the optimism and the momentum and the supply issue, we're going to have volatility, definitely. But for me, just thinking about supply and demand, and that I believe it's long term gonna go up. And again, not
Well, that
finding
just kind of
surprise.
stuck in my head, you know, that it might be having a pullback in a little bit.
Potentially. I mean, I don't
think
know. I mean,
Could
I
be.
couldn't tell you.
Yeah,
I
who
couldn't tell
knows?
you.
Who
Yeah,
I think
knows?
on a short-term basis, if you look at the price action yesterday, basically a sign of indecision, and then the move today, you know, not on as much volume in comparison, but we may have come to a retracement, you know, point. And from an optimistic standpoint, I guess I look at 109 as sort of the target from on a very, very, you know, short-term basis. So
Mhm.
that's my take.
there's a guy, he puts out a video on YouTube once a month. He's called Plan B, and he's the one that has the power ranking, and his just go watch his videos, because he's got through the seasons and everything. And I think his prediction by the end of the year, and he's been pretty solid, is 250,000. Okay.
This
By
year?
year end?
His game, yeah, I believe it, by Plan B. Because when you look at it, he does it logarithmically on a chart. And as
Yeah.
you get higher, the bands get closer and closer. You know, like from 0
Yeah.
to 10 was like this big. And like
Yeah.
from 100,000 to a million's like that big. Okay. So go look at Plan B and see what he says, and just, you know, look into it yourself. There's a lot of really smart guys out there that look into this, and Michael Saylor is one that I follow,
Yeah.
and yeah, so
Okay.
I think it's something that needs to be considered, and obviously you guys have an interest, so we'll have another Zoom call outside of this one to focus on that more, and then we'll get back into swing trading and charts, and I want to hear what Paul's been looking at, and what Scott's been looking at, and what David's been looking at. We didn't get to do that today, but I certainly enjoyed doing that. So we'll make our Fridays more about that, and then maybe we'll swing off a crypto, you know, for an hour, where we can talk about crypto. If
Well,
that's okay with
Thanks.
Trent.
That's okay with me.
Okay.
I just want to talk about making money. Okay,
Okay,
that's
well,
the bottom line. That's why I'm in it. Making money. I don't need to be right. I just need to make money.
Yeah.
So I think everybody likes that.
Mark,
I agree.
you talked about MicroStrategy. I
Right.
wonder, do you know about this other company trying to do the same thing, which was in, I guess, printing Bitcoin or something business, but is moving around? Mara, have you heard of Mara?
Yeah,
Martin
Mara.
Digital.
Yeah. Here's let me
Abbreviation is Mara,
yeah,
M-A-R-I, or M-A-R-A, I believe.
yeah. This was
They
the one.
started the same strategy as MicroStrategy, meaning that very strange bond and issuing bond or whatever that he's doing.
Convertible bonds. Yeah.
Yes, yes.
This is the
But
Chinese
it's
company.
very new though.
This is the Chinese company I talked about earlier, NA. They got really low volume though, like 99,000, 127,000, but they are going to buy 10 million or whatever over the next 5 years. So it moved it. Again, I wouldn't be investing in that one per se. Mara, it's been around for a while. This is the one you were talking about. Okay.
Yes.
This was election day right here. And you can see this is when they started talking about it, and they just did buy it. And again, if you're using technicals, you're seeing flattening out, Bollingers, you got a green line of death here, and, flatness here in the oscillators. So again, yeah, this is another one that's looking into it. Microsoft, we'll see that Microsoft is actually going to hold a vote at their shareholder meeting this week. We'll look at Microsoft, too. Just think though, Trent, what do you think if Microsoft actually voted to start putting Bitcoin? What effect would that have not only on Bitcoin, but on the other Mag 7s that might say, oh, frick, now Tesla's in it and Microsoft's in it. What do you think?
I think this process of go back to El Salvador and them adopting this small bit of legitimacy given to Bitcoin. And now look at how we progressed with Argentina, and now the U.S. government, where Michael Saylor was just a kook, probably before El Salvador happened. But now he's becoming legitimate, he's legit now with Microsoft saying, hey, state of Pennsylvania, I think it was like 700 million they're talking about putting into it. I think if a company like Microsoft and they can get their board to say yes and adopt this policy and shareholders, Bill Gates is one of the bigger, probably, he's probably 10% of the company ownership of the stock. You get him, Steve Ballmer, and a couple of the other original say, yeah, let's do it. I think it gives a grade of B plus to A minus on legitimacy, and then all of a sudden the floodgates start to open up, and that's when people start gobbling up. Which then, if they start gobbling it up, less supply, yes, more demand. Does that expand the price range to $250, $1 million, possibly? But at what point does it just sort of level off because nobody's selling it, or But in those cases, you probably do have some selling because the corporation does have to tap those reserves every so often. So I think if Microsoft does it, it's just another level of legitimacy, and we enter that acceptance rate starts to accelerate.
So do you think like then a Google board and a Meta board and all those are like, okay?
I think they're already talking about it. I think they have to look at it and go, I'm been dumping money sitting in US Treasuries. I can do the math between deflating, diluting the currency and inflation, and we're getting nowhere. This could be the move, especially their tech companies. So their crew, their people are all geeking on this anyways. And so they have been for years. So they're like, yeah, it's just a natural progression in all of it, I think. So and that's why going back to what I said earlier, you got an administration who's pro renovate the house, how we run our government. We have pro Bitcoin. You got 24/7 hour trading in the wings. Are we at this evolutional pivot where we've done this since 1900? We've plateaued, we went down a little bit, we've flatlined, and now do we head higher? And is this one piece of the pie? And I think it is. I think it is. But it also creates a different environment of how we go about creating wealth for ourselves. And we have to be open to the possibilities, the ideas. The thing that I think bugs me and has taught me about crypto is the negative, oh, that's just a piece of crap. When I had a 24-year-old kid 2 nights ago tell me, it's just not tangible. It doesn't make any sense. And I'm like looking at going, you're the generation I would think would adopt this because of how your generation thinks. And this is, a good old solid kid. And when you explain the US dollar to him, I'm like, yeah, but you invest in the US dollar every day. And what is it got? Somebody says it's good, credibility. I mean, come on. So yeah, I think this could be the thing that changes the world.
It's the psychology of I can't touch it.
Yeah.
You can't touch it. There's so much you can't
Well,
touch. You can't
and
touch
it doesn't-
oxygen.
Yeah,
it
no,
does-
that's true.
yeah.
That's true. You can
And it
see it
doesn't-
sometimes.
And it doesn't get inflated. Can't be inflated away.
It goes back to the mechanics of it.
It's
Yeah.
not for everybody.
It's certainly not.
Yeah. It's not for anything is not for anybody.
That's true. Yeah.
That's right.
Yeah,
Some of us,
so-
I don't own any gold.
I don't either.
Not for
I
me.
don't either.
Oh, it's all right.
I mean, maybe my wedding ring. That's
Mark,
about it.
2 points. Number
Yeah.
one on Bitcoin, you will see a huge change in the way everybody thinks if Trump gets his 100,000 coins in the treasury.
That'd be 1 million coins is what he wants.
Yeah, it's a staggering number. And then I heard him say on Fox the other day something I hadn't thought about, and they were talking about real estate and how our economy is going to change because you've got the largest number of young people who have now made generational wealth because of Bitcoin. And that one really took me back because it's like they're talking about these young kids, 25, 30 years old, buying $1 million homes now because of Bitcoin.
Yeah.
It's going to change our economy.
And on top of that, you're going to have the largest transfer of wealth from baby boomers to their kids here too, with the inheritance.
I don't believe that. They've been saying that
not the
since
way-
the 90s, dude.
Not the way your
You
dad.
take off the ends of the
Not
curve on
the way
that?
your dad spends. You're not going to get anything.
Yeah, no shit. So you look at the average household, baby boomer household, and you just take off the nothing and the ultra wealthy, and you take those averages off, and you look at it, there ain't a whole lot of money, especially if they continue to live. There ain't a whole lot of money left. So this transfer thing is getting eaten up by inflation, healthcare, and whatever else. Years ago, I remember sitting in an American Express financial advisory meeting saying, this is the opportunity for us to capture assets. This is the wealthiest generation. Anybody under 55, forget it. Go after these people. They got all the money. They don't got money. They're spending it on prescriptions.
I think I hit a button. I hit the Grinkmeyer button.
Why do you suppose this market is at an all-time high again?
Yep.
Good question.
Because they want it to be.
Who wants it to be?
Because the powers of the world want it to be. Optimism, fear of missing out. How did my friend put it? Pain trade. I've been sitting in cash since 2010. I've missed out on the 2021 or the 2010 to 2020 or 2019 move. I missed out on the 2000 June of 2020 to 23 move.
Yeah, but retailers
now
aren't
they're all
driving this
coming
market
in.
up, though.
Oh, I
Retailers
think-
aren't.
No.
I think
Retailers
it's. I
aren't
think it's.
driving it.
I think it's passive invested, Paul. I think that with people with their 401, since we have 401ks and there's passive investing, money continues to flow into the market, whether it's up or down. I think that helps it a lot.
Yeah,
Well,
it's a big point. That's a very good point.
Yeah.
But I do think this is a pain trade for a lot of my buddy who's a wholesale rep for a mutual fund company said he knows advisors who still are sitting in 50% cash and have been since 09. And they're
I believe it.
trying to explain it away to their clients, and they're losing clients now. So they start to make emotional decisions at that point. That's
My
scary.
friend, the rancher.
Irrational exuberance,
Yeah, there's some of that.
a lot of it.
My friend, the
Yeah.
rancher, he called me. Well, we had beers the other day, and he's like, "Hey, I got my statement." He says, "I'm up 13.5% this year in my investment account. Is that good?" I said, "Well, typically that would be good." I said, "But if you just put it in S&P 500, you'd be up 27% for the year, you know?" Um, so it's all, beauty's in the eye of the beholder, but majority of these fund managers do not beat the index they're tied to.
Is there a way to
That is true.
determine how much is institutional buying versus retail?
For any particular stock or what?
For the entire market?
You can, I
Like,
don't, Mike, do you know of anything?
Not off the top of my head. I know it's out there, but it's probably behind paywalls.
I know you can go into individual stocks, look up how much institutional, owns it,
yeah.
Yeah, I'm sure it's out. I'm sure it's out there, Paul. We have to look into that.
Yeah, that'd be a good data point, right?
Yeah,
Because if it
definitely.
was, if it was mainly institutional versus retail, or is it driven by retail? Yeah,
So
it'd be good to know.
do you consider like Fidelity or Vanguard, who I'd send my 401k as institutional? Because they're investing for me.
I think if Fidelity invests on your behalf, I think Fidelity would be considered institutional, but that's my
So
2 cents.
if we were all a company here and we all had 401ks and we put $1,000 in every other week, and then we sent it to Vanguard and they bought S&P 500 for us, that'd be
Yeah.
institutional, I think. Yeah.
Yeah, I think so.
If you're buying it through a mutual fund, yeah.
Yeah, I don't think it's
'Cause-
retail investors that are driving this up at all. I think it's more something else.
No, there's a lot of retail.
I would be very interested to know how much money is coming into the stock market outside of the US.
Oh, like international.
Because Trump got
That's
elected,
a good point.
international money is flowing in here big time.
You
That's a
guys,
good one.
that's too blurry. I'm looking at a Webull app on the phone, and it shows shareholders and it shows the institutions, corporations, and insiders and others that hold a particular app.
Right.
Is that what you were talking about?
I think he was looking at the whole market, weren't you?
Anything that would give us some insight of why this market is up, because we talk week after week, the market's up, but what's driving it? We're
Yeah,
unsure. We're all speculating
this
right
is
now. We
just
don't have any facts.
individual companies, Paul. This doesn't
Individual
say
companies,
that.
like you think Microsoft is buying a bunch of share? I mean, who's buying what? I guess
Yeah, this
it'd be good to
doesn't
know.
give that.
Well, there's a lot of buybacks. When the window's open, these companies do a lot of buybacks to make their share more valuable, and that's what makes some of their shares go up. Also,
Yep, it's a good thing when they're buying back shares when they
Yeah.
announce that during earnings. I know,
Well, for an investor, for sure. Yeah.
but I think that would be personally. I would like to know that. Maybe
Well,
I don't know where to look for that. Yeah,
let's take a look this week and see if anyone can find it. Maybe we can bring it up next week.
I had
Yeah.
saw something about that on one of my research pages. I'll have to go back and find it, and if I do, I'll share it.
Yeah, that'd be great.
This has been an awesome week.
Yeah.
I mean, it's a long time. I don't know about you guys, but I made more money this week than I can remember. I'm on paper. On paper.
Yeah, that's.
And Dave's over there. I know
the
Dave's
thing.
doing very well, but this is a great week. This is a
Paper.
great week, and I know you
This-
talk about Bitcoin a lot, but if I said, Dave, what'd you do? What's your winners? We'd be talking about him for about half an hour about all his winners.
Yeah.
And I'm just trying to say there's a lot of, and I wouldn't go to the Mag 7 to get what companies are doing awesome. There's plenty of speculatives. There's been fintechs. They're across the board. There's a lot of companies that are doing very, very well. So
Okay.
There's
Good.
opportunity.
Yep, definitely. Well, guys, we've got burned up 2 hours. I really enjoyed everyone's today. Today was a fun day. A lot of commentary. Anyone else have anything else? Eric, we haven't heard from you. Anything from you?
Nope, I'm just accumulating and holding long.
Good. All right. Well,
Nice.
we will see you maybe at the 3 o'clock meeting. If not, Trent, we'll we'll figure out something for next week for kind of a Bitcoin
Yeah.
or crypto
And
kind of.
I'll send out an email and also post it on the Discord as well, when we decide to do it.
Yeah.
But you and I will come to a conclusion by Sunday.
The
Okay.
Bitcoin bonanza.
Yeah.
Yeah.
There you go. Okay, yeah, I think that'd be a
All
good
right.
add-on for Platinum to talk about that, and then we can go and talk about the other great companies that we're seeing on this one. So awesome.
Absolutely.
Appreciate everybody here. Have a good weekend if we don't see you at the 3 o'clock, and we'll continue on next week.
See y'all
All
later.
right.
Bye,
Y'all
guys.
take care.
Bye.
Yep.
See ya.
Bye now.
Bye.
Bye.